Hey, what is happening, bulls and bears? My name is JJ. You're watching Bull, Boom, Bear, Bust. Today, we're back with another dose of housing market reality. Yes, real estate market reality today. Today, we're going to talk about the calls. Many people are predicting a real estate market crash, and they're saying it's going to begin here very, very soon with the Airbnb, what they're calling the Airbnb crash. I actually disagree with a lot of these calls for a crash, and I'll tell you why here in this video. Please make sure you like and subscribe. We've got a lot of good information to get into today and all of our videos. Every video, I think most of you will agree that have been watching, we uncover a lot of good info. So please help support this channel, and we'll get through this financial chaos together. All right, let's talk about it here. So Airbnb, how big is it? Well, it's pretty big. But first, here's who's calling for a crash. One of the biggest, most well-known people most recently has called for this. Kiyosaki put this post out here recently. Quote, Airbnb to lead real estate market crash. If you want a new home, your happy days are around the corner. Same for rental property. The best time to get rich is in a crash. Good luck. That's the end of the quote. So here's the thing. Yes, the market could crash anytime, but it's going to take something big. It's going to take a 2020 crisis sort of thing to bring the economy down, to bring the markets down, to bring the housing market down. The banks would have to stop lending money. All the banks would have to really restrict lending in order for prices to come down. The problem that we have right now is the supply of money. People think the supply of money is shrinking. It's actually not true. They're looking at the M2. You can't just look at the M2. You have to look at what the banks are doing. The banks are loaning out money that they don't have. And right now, there's no limits to the amount of money they can loan out. That's why they don't need your deposits, right? We'll get into that at another time, but that's what underpins this whole thing, right? So let's talk about Airbnb. First of all, how big is Airbnb? Well, it's very, very big. Airbnb has had a total revenue of about $8.4 billion in 2022. In the United States, there's about 660,000 Airbnb listings or homes. That's the most of any other country, the most of any country. The country that comes closest is Spain with about 245,000 Airbnb listings. So that number is important. The United States, think about that. 660,000 Airbnb homes or listings. The thing that's been happening recently is there's been a revenue collapse in Airbnb here just recently. And here's some of the bigger collapses. Phoenix, Arizona, 47%. Austin, Texas, 46%. These are year-over-year numbers. Myrtle Beach, South Carolina, 45%. San Antonio, Texas, 43%. Asheville, North Carolina, 42%. Nashville, Tennessee, 39%. Denver, Colorado, 38%. New Orleans, 37%. Seattle, Washington, 35%. I just picked out some of the larger cities. There's a lot more smaller cities in there. But the point is, the revenues are dropping. People are not as able as they were, not as able to go out and spend money and travel as much as they were. Now, yes, there's still a lot of people running up debt and putting things on credit cards, but with the cost of living crisis that we're in right now, a lot of people are becoming very wary about spending money they don't have to spend, and discretionary spending is starting to drop. And we're seeing it in a lot of other areas of the economy, but Airbnb is definitely seeing a drop off in revenue. Now, it was Nick over at Reventure Consulting right here on YouTube that put this out, along with the following post. Quote, the Airbnb collapse is real. Revenues are down nearly 50% in cities like Phoenix and Austin. I just read you those cities. Watch out for a wave of forced selling from Airbnb owners later this year in the areas hardest hit by the revenue collapse. All right, so he's got a very successful YouTube channel. He's blowing my channel away. I think a lot of his views though are hopium because people watch his channel. He's been calling for a housing crash for a couple years, but he puts out a lot of good content. His video quality is awesome. He does a lot of cool stuff, on the street type of reporting, things like that. I'm not saying he's not a good YouTuber. Obviously, his numbers speak for themselves, but I'm just saying that A crash, very unlikely. So here's the thing. Even if all of these 660,000 Airbnbs got put on the market for sale, that still would not balance out the housing inventory or listings right now on the market. So here's an example. All right, right now, or as of July, I should say, the most recent numbers that we have, the listings are about 1.497 million, so just under 1.5 million. Even if all the 660 something thousand Airbnbs got put on the market for sale, let's say let's say the owners of these Airbnbs were financially distressed because their revenue is dropping and they all started to sell, which will never happen. But let's say it did. That would only put the supply of homes for sale right now in the United States at about 2.1 million. Now, the 1.4 million number, that's per Redfin. If you look at the Fed's numbers are even lower than that because I don't think they count listings that are contingent with active offers. But anyways, you could see the point. The 2.1 million would still put us at pretty low housing market inventory, or a low number of homes for sale from a historical standpoint, right? So even a complete crash in Airbnb, or a complete implosion in profits where all the sellers had to list their homes, again, which will never happen, but even if that did happen, that still would not balance out the housing market as far as the number of homes needed versus the demand. And it wouldn't cause a real estate crash. So I think a lot of these housing market analysts, they just look at the price and they see what the price was in 2008, but I don't think a lot of them understand the fundamentals of money and how money is loaned out right now, which is keeping prices elevated. Now, that's not the only factor. There's many other factors that we cover on this channel here all the time. But the bottom line is, I don't see this starting a housing market crash. And if you disagree with me, please let me know where I'm wrong. Let me know in comments, and maybe I'll learn something from you. But this is the way that I see it. And, I wish I was wrong. I wish the housing market would come down, and I wish things would become more affordable. Maybe the homeless problem would start getting reduced even a little bit. A lot of people that have been waiting on the sideline for years, trying to save up for a down payment, are just getting more discouraged all the time because prices are not coming down. So, of course, I would love things to be more affordable, but I just have to give you economic reality and today housing market reality. This is what I see. Now, again, could something else happen to bring this whole thing down? Absolutely. If the banks are ever held accountable, if they ever pass a law that says banks cannot loan out money out of thin air without actually having it in deposits, then this whole thing would come down hard. You would see a 90% drop in home prices, maybe even more. But as long as the system of money stays the way it is, you're going to see prices elevated. Remember, in 2008, when the housing market came down, banks really pulled back on lending. So could we see something change in the laws or the regulations? The bank regulations? Absolutely, that could change. But the people that put these laws or enact these laws, they're getting paid a lot of money. They're making a lot of money with the system functioning the way it does right now. So I don't think this will be done on purpose as far as someone passing a law saying the banks can no longer do this. Now, besides something big happening to cause a housing market crash, like the entire structure being altered or changed, or everything going dark, with the grid going down or something like that, there could be a combination of a lot of different things coming together to cause so much financial hardship that you would see the housing market start coming down and maybe even crashing. Now, one of those things is corporate bankruptcies. Now, we have some recent numbers here, and corporate bankruptcies this year are on pace or almost as bad as they were in 2020. Remember, 2020, an economic disaster basically hit with all the shutdowns, and a lot of companies went out of business. Now, ever since then, they've been calling this, I talk about I'm talking about the business news people. They've been calling this a financial recovery or an economic recovery. So if this is an economic recovery, why are corporate bankruptcies almost as bad this year as they were in 2020, right? Because there's really no recovery. It looked like a recovery when they printed tons of money and flooded the economy, helicopter money coming down, which also caused massive inflation along with the supply chain disruptions. But I certainly wouldn't call that a recovery. I would call that a debt binge, giving the illusion of an economic recovery. Right? So we have that. We have corporate bankruptcies. We have commercial real estate really dropping hard, and that's going to cause a lot of distress on banks. But again, if they don't hold the banks accountable, if they're just going to get bailed out, if the FDIC is just going to come in and cover everyone, and if they're just going to have guaranteed life support, then that's not going to be a structural change in the banking system, because we're still going to have all these mega banks, these too big to fail banks. Now, a little more over on the corporate bankruptcy situation this year in 2023 is the worst, excluding 2020, is the worst since 2010, when the economy was coming out of the financial crisis. But ever since then, it took rock bottom interest rates to bring prices back up, to bring the stock market back up, the housing market, asset prices. And right now, the cost of living is just eating people alive. So that's another part of the equation. How much longer can consumers hang on with these prices? As we see a big uptick in layoffs, and the corporate bankruptcies, of course, adds to the pile of layoffs, and people have to go find another job. And a lot of these other jobs they're getting do not pay as much. So things are continuing to unfold, just like we talked about. It's a slow motion collapse, folks. No crash, unless some big black swan flies out of the woods somewhere. Other than that, this is going to continue to be a slow motion collapse. It's a frog in a pot. It's heating up so gradually, and it's getting bad so gradually that a lot of people aren't even noticing, right? I think a lot of people notice that their dollar doesn't go as far as it used to, but I don't think a lot of people know how broad this is and how many people this is affecting. We have, again, 60 to 70% of people living paycheck to paycheck. We always have to quote that number because that's economic reality. They can pump up the stock market, but the money being used to pump up the stock market, is that helping the average person? Well, no. Even if it's making their 401k accounts, go up, they can't take that money until they retire. If they do, they're going to get a penalty, pay a big fee to Uncle Sam. And, the money that people are saving up in their retirement, it's really not usable. Yes, you could take an emergency loan out and use it for a down payment on an overpriced house. But really, it's not very useful to people right now. So yes, they could pump up the stock market, but what's happening on the street for the average person, like you and me? Also, some more data proving that the housing market is not changing very quickly. The housing market's inventory crunch deepens. All listings fell for a fourth straight month in August. So the number of listings has been declining now for 4 straight months. The total number of homes for sale dipped by 9.2% from a year ago. So in a housing market crash, you would see inventory increase, more homes for sale, more homeowners getting desperate, putting their home on the market. But instead, even with these crazy high mortgage rates, the number of homes for sale is down over 9% year over year. This year, it is up 19% since January. So maybe we're starting to see a beginning of a trend with more listings on the market. But if you look at a year ago, we're still less listings than we were back then. So pretty wacky, pretty crazy times, folks. What do you think about this housing market? Please let me know. Now, just on a broader topic for a minute here, I think very soon we're going to see a lot of information revealed that's going to shock a lot of people. So there's a lot of things happening politically now that are going to be coming to light, and I can't really go into it too much here, on this channel here, but I think a lot of people are going to be shocked at what's going to be happening in the next few months, right? So keep an eye out, folks. Be careful out there. As always, keep stacking. Blessings to all of you out there for being here, for watching me on this channel, for listening, and for interacting. Again, down in comments, I'll be reading your thoughts. Everybody, thanks for watching. Big love. Keep stacking. Peace.